What's up, investor homies? I'm just going to make a video today to show you kind of what I think about fundamental valuations when I think about growth stocks, or really just, I like growth stocks, so this is mainly about growth stocks. Just want to run through kind of my mindset and some tools I might use to kind of look for some plays, this is really good to do after earnings because you're going to get the most up-to-date data. So what I'm using today is hypercharts. So I like hypercharts just because of the way they present their data. It's really helpful to just, if I look at Microsoft, they'll kind of break down segments. It's really good graphically. You can put it in an annual or quarterly look just to kind of see, okay, here's what their revenue is doing. Here's how this segment was compared to the last quarter. You can look at, their gross profit versus their earnings or operating income. So it really gives you a better look rather than just looking at earnings or just looking at revenue. It really gives you, how profitable is this business. They'll show you their gross margins, and they get down to their operating margin, profit margin. So I think a really neat tool. So if you look at what they do is hypercharts, you can request different companies. So these are a lot of popular companies. They might be growth companies, a lot of large cap companies. I would say in general, these are pretty high quality companies just because of the, just size of them. I don't know, every single company in here, but I would say like in general, these are companies that a lot of people are interested in looking at, so they're requesting them. I think they're pretty high quality companies anyways, but this isn't to say you couldn't do this with like a FinViz or any other stock screener and really just, I'm sure this data is available. So what we're looking at is we've got this TTM revenue multiple. So that's the trailing 12 months revenue multiple. So I guess to start off, trailing 12 months revenue is right here. And that this multiple is simply the market cap divided by the trailing 12 months of revenue. So that's where this multiple is coming from. Then in this column, we have revenue growth year over year. So hopefully that's self-explanatory what that is. But when we're talking about like if a company is expensive or not, you can't really just look at this column and say, okay, this is okay, 16.7 Tesla, they're expensive. You can't, and if you look at their growth and say they're growing 100% revenue year over year, they're cheap. Like it's a combination of like the fundamental multiple that the market is giving it and also how fast it's growing. And this number is not it's not a hard, fast number. It's a changing number based on the market, interest rates. There's really a lot that goes into it, but kind of an interesting thing to do is kind of compare how this growth over last year is compared to their revenue multiple. So what I did was I just copied all this data, threw it into a spreadsheet, and that's what this is. So to start off with, I got all the data and I charted it. So on the x-axis is the revenue multiple, and on the y-axis is the revenue growth. So we can see FedEx is up here. If I hover over it, the little data tells me that they have a 0.8 revenue multiple with 30% growth. So I'm just going to call it multiple instead of saying like trailing 12 months multiple or whatever. So it's their multiple and then it's their year-over-year growth. So the further right you get and the further down, that's kind of the lower growth and higher valuation. So this is not a full list. This is actually kind of the bullish list I made. So I made a bullish and a short list. So these are kind of the best companies. So kind of interesting. JD coming in here at 50% growth and a 0.8 multiple. So pretty good. I think there was actually a few outliers that I just got rid of just because it was like insane growth and just kind of threw everything off. So I whittled the list down a little bit here. But yeah, if I was going to say, I'm looking at this chart, these are ones I'm potentially bullish on, just because they were the better ones of the group. And I have some trend lines in here to kind of see where things are. But the further right you get, the higher the multiple. Honestly, I'd be nervous about any, certainly if you're a long-term investor, it's not bad to get into something that has a multiple over 10 or whatever, but definitely would prefer something under 4, just my personal preference, maybe under 7 to be honest. But so that's that list. Then I did the same thing, but I put a short list together, and so these were ones that had a super high multiple. And so here's where, I look at Cloudflare, and they kind of popped up on my radar. They've got a 70 times multiple and a 50% growth rate. So if we go to the bullish list here, Logitech grew at 65% last year. And I don't know, obviously people are assuming Cloudflare has a lot more to grow, but the reality is that if the market declines, these stocks to me have more risk in them, so it might be a good short play. So this is kind of where I'm focusing on my short list, like the further right and the less your company is growing. I mean, that's where I feel like the opportunity is there to short. And for here, the faster your company is growing, the less your multiple is, the better off you are. So I also did like a comparison. I just have the full list here. And so what I did was I took the growth and put the growth instead of a percentage, it's like a full number. So this is, this is growing at 105% per year. This is almost growing at 200% per year. And then we've got your multiple here. And so what I did was I multiplied the multiple by 10 just because these numbers, I already kind of converted this out of percentage, and so it just didn't make sense to like divide 200 by 2, just as like would really skew the numbers that I'm trying to get. It would really skew it towards growth. And so what I did was I multiplied this multiple by 10 to kind of give me a more even number. So now I've got, if I multiply by 10, I've got around 20 here divided by 200. Okay, that kind of makes sense. I could have even, anyways, in doing this, just sorting this number, this kind of arbitrary number that I'm doing to compare these two, this is what I got. So we've got like Canadian Solar has 26, so they grew at 105%, and yet their multiple was only 0.4. As we go down to kind of more expensive ones, so like Albemarle had like almost no growth, yet they were valued at a multiple of 8. So according to this arbitrary number that's here comparing these two factors, kind of one that you might want to look at as far as shorting. I'm not going to go through all of them, but this is kind of a mentality, a way to like build a watch list, and if things start to break down, I'm definitely going to be watching these stocks and looking to put a short position in.